Welcome to Market Updates HQ, your command center for navigating today's volatile markets. Every week, we break down what's really happening in macro, crypto, Bitcoin, AI, and the commodity forces that matter most to your financial future. The stuff that mainstream finance is afraid to cover because it's too uncomfortable, too contrarian, or too real. If you want to understand what's actually happening with your money, before everyone else catches on, hit subscribe. We bring out new episodes every week. No fluff, no hype, just signal. Let's get into today's episode. Picture this. It's a Tuesday morning. You're still half asleep. You reach for your phone, not for the news, not for social media, just to check one number. And that number changes everything. Not because it went up, but because you finally understand what you're actually holding. Most people watching this right now have Bitcoin. Some of you have a little, some of you have a lot, but almost none of you know the exact number you need to never work again. Today that changes, because today I'm going to show you the Bitcoin retirement number, calculated, broken down, and made real for people living in the real world, in cities like London, New York, Dubai, Sydney. And I promise you, the number is smaller than you think, but the window to reach it, that is closing faster than anyone is talking about. Let's start with the math that will reframe everything. There will only ever be 21 million Bitcoin, ever. That's not a policy. That's not a decision that a government can reverse. It is code. It is law. Right now, 19.8 million of those coins have already been mined and pushed out into the world. That means we are left with less than 1.5 million Bitcoin still to be mined for the rest of human history. And here's where it gets uncomfortable. In 2036, just 10 years from now, the block reward paid to miners every 10 minutes will shrink to a tiny fraction of what it is today. The entire 4-year mining window between 2036 and 2040 will produce only 39,000 Bitcoin total. Let that land. One public company already holds more Bitcoin than will be produced in 4 full years of mining, and they're not alone. ETFs, governments, sovereign wealth funds, they are all accumulating, right now, quietly. Here's the stat that truly keeps me up at night. Over the past 2 years, 900,000 Bitcoin has left exchanges. It has disappeared into cold storage, into ETF vaults, into institutional balance sheets. And here's the twist. This happened while the price was going up. Every other bull run in Bitcoin's history showed coins flowing onto exchanges as prices rose, people selling, taking profits. This cycle, the opposite happened. Coins are leaving, and they're not coming back. If you run the numbers and extend this trend just 5 years forward, exchanges could run functionally dry of freely available Bitcoin. The day you casually open an exchange and buy your first Bitcoin, that day may have an expiry date. So, how much do you actually need? Research analyzing retirement costs across nearly 100 countries found that in the UK and US, most people would need somewhere between 0.5 and 1 full Bitcoin to retire comfortably by 2035. But let's go deeper, because that's a target. What matters is which city you're in and how old you are today. The global money supply has expanded at roughly 7% per year for 50 years. That means the retirement nest egg you need in a city like London, New York, or Sydney in 20 years isn't $200,000. After compounding inflation, it's closer to $775,000, nearly $900,000. That's the fiat trap. The goalpost keeps moving, away from you. Now let's flip the equation. Independent analysts show that a 35-year-old today, targeting retirement in 2040, would need approximately 1.54 Bitcoin, based on an inflation-adjusted Bitcoin growth model, targeting $100,000 per year in income. A 45-year-old? Closer to 4.3 Bitcoin to retire by 2030, but here's the number that matters most for the average person watching this video right now. 0.1 Bitcoin, the life-changing threshold. If you can get your hands on just 0.1 Bitcoin and hold it, I mean really hold it, you have placed yourself in a category that only 210 million people on this entire planet could ever occupy. There are more millionaires in the world right now than there are whole Bitcoins available to buy. Think about what that means. Now I need to stop and be brutally honest with you, because this is the part nobody wants to say. The number isn't the hard part. Keeping it, that's the war. Imagine it's 2028. Bitcoin is in a full manic bull run. Your 0.1 Bitcoin is suddenly worth $25,000. The roof needs fixing. Your friends, who laughed at Bitcoin for years, are now texting you saying, take profits. It's a bubble. The news is screaming the top is in. In that moment, every rational feeling voice in your head will tell you to sell. The moment you sell your 0.1 Bitcoin, the probability of ever owning that amount again drops to near zero, because while you wait for the dip, the institutions don't wait, they accumulate. Supply drains further. The window gets smaller, and those coins you sold, they don't come back to retail. They go into ETF vaults and corporate treasuries and cold storage that will never be touched again. You are not trading against a chart, you are trading against your own psychology, and the entire system is designed to separate you from your Bitcoin at your weakest moment. So what's the actual plan? How do you get to your number and stay there? 3 things. Write these down. Step 1, know your number, not my number, yours, based on your age, your city, your lifestyle. That's exactly why I built the Bitcoin Retirement Calculator at marketupdateshq.com. You put in your age, your target income, your current stack, and it tells you exactly how much Bitcoin you need to retire, not a generic estimate, your number. Go to marketupdateshq.com right now and run your numbers. I want you to know your target before this video ends. Step 2, build your fortress. Never sell from a position of emergency. The biggest threat to your Bitcoin stack isn't a crash. It's your car breaking down and having no emergency fund in pounds. Build a cash buffer of 3 to 6 months expenses in fiat so you are never, ever forced to sell. Step 3, stack consistently, not perfectly, consistently. Dollar cost average, every week, every month. Whatever you can afford, even small amounts matter now in a way they will not matter later. ETFs alone have swallowed over 1.3 million Bitcoin in just 15 months since launching in the US. That's 6% of the entire supply, gone, in barely over a year. The supply clock is ticking. The year 2030 is not far away. The math behind Bitcoin's scarcity is not a prediction, it is a protocol. It cannot be printed away. It cannot be inflated. It cannot be undone. The only real question is this. When the window closes, will you be inside or outside? Go to marketupdateshq.com, run your Bitcoin Retirement Calculator right now, and find your number. Because the best time to know your number was yesterday. The second best time is right now. Don't forget to follow on Rumble and X at MarketUpdatesHQ for your weekly market intelligence briefing. I'll see you in the next one. Thank you for joining us at Market Updates HQ. If this analysis was valuable to you, consider liking this video and subscribing to our channel so that you never miss an update. Staying ahead in these volatile times requires accurate information, and we're committed to providing you with just that before you make your next financial decision. Also, we'd love to hear from you. Leave a comment below on which markets you're tracking and what topics you'd like us to cover next. Stay informed, stay focused, and we'll see you in the next update.